You are now tuned in to The Money Zone with your host, Folasade, the accountant for entrepreneurs. The time is now, your future waits, your money matters, make no mistake, it's not too late to dominate, so don't delay, get your money straight. The money zone, together we'll achieve your goals, we're building wealth, you're not alone, so don't delay, get your money straight.
Hey guys. Okay, welcome to another episode of The Money Zone on RIP Radio Network. I'm your host, Folasade, the accountability accountant, guys. I'm excited to be here on Tuesday. Even if I had a rough little day, we got to kind of put that behind us, get behind the mic, and just act like nothing happened. So that's what we about to do today. But look, guys, I just want to just go ahead on and just tell you, don't forget to subscribe to my mailing list. Go to bit.ly/Folasade TV. Subscribe to my mailing list. We have so much going on. We have an amazing web series that's happening next week. You guys want to be a part of it and don't miss out. So don't forget, subscribe to my mailing list, bit.ly/Folasade TV. So guys, we got like so much to talk about because look, you know you didn't receive your tax refund and you know you're not doing things the way you're supposed to have done it. And today on the show, we're going to give you some strategies as to what you guys should have done if you've already spent your money, or what you could do to basically use your tax refund to level up your finances right now. So that's segment one. And then segment two, we're going to talk a little bit about why entrepreneurs need accounting and the downfall behind you not utilizing accounting to really up-level your business, up-level your finances, and basically dominate your industry. So I'm excited. So we're about to go ahead on over to a quick break before we get started, and I'll see you right back. Welcome back. So we had to take a little quick break so we can get everything situated behind the scenes. But I'm excited because, look, tax season is here and there, but I'm still looking real pretty. I don't have that too many bags under my eyes. But look, for all of you that are not satisfied with the amount of money that's in your bank account, you want to grab your pen and you want to grab your paper right now, because I'm going to give you guys a few tips as to what you should be doing with your tax refunds. A few tips as to what you guys should be doing with your tax refunds to basically level up your businesses, reduce your debt, or basically take your lifestyle to the next level. So first things first, if you've already received your refund, right? You were supposed to put a portion of it to the side. You were supposed to save at least 10%. At a minimum, 10%. So if your tax refund was $2,000, you should at least put in the savings $200. That's the minimum amount. Remember, I don't care what you guys are doing. There's two things that they say we must continuously do. That's save, which is somewhat considered paying yourself in your business. And two, they distract. And number two, basically, I didn't forgot everything that I said because I'm not really used to too much noise. But let me go ahead on and start all over again. So number one thing that you guys must do is put 10% away for your savings, and then put 10% and go and tithe. Go and give it to your church. Go give it to a community. Go and do something that can basically help someone else. So go and serve with 10% of your money. Go and put 10% of your money in the savings, and that 80%, right? 20% of that, so that's another 20%, you're supposed to now pay down existing debt, okay? 10% for tithes, 10% for savings, and then 20% to bring down or pay down some debt, okay? Pay down some debt now. So that means if you owe student loans, pay it down. If you owe high credit cards, pay it down. If you own a home, put that towards the principal payment. If you have a vehicle that you have a car note for, put it towards an extra payment or towards the principal of your loan. So that's what, 20, 40, yeah, that's like 40%. So you have like 60% left right now, right? So with that other 60%, you guys are going to be so mad when I tell you this. You have to do something for your home. So that may mean fix your roof, or put some money to the side to fix your roof, or buy a new piece of furniture, or paint your walls, or something like that. So I know you've probably never heard no one tell you to put money back into your house, but remember, right now your house is a liability because you probably owe something on your mortgage, right? So a portion of it may be an asset. The equity that you have is an asset, and the portion of the loan that you owe, that's a debt, right? So remember, we already done paid 10% towards the good, bringing down the principal balance, right? But think about this. If you don't take care of that home, if you don't keep it looking beautiful, if you're not putting money back into your home, then what would it look like? It's going to look like an old lady that nobody ever really wanted to touch, and she needs some loving. And most women that need some loving, you can see it on their face, you can see it on their body, you can see it anyway. And that's how your house will start to look if you don't put money back into your home. So 10% savings, 10% tithe, okay? Then that 20%, pay down some debt, okay? And the other 20%, put some money back into your home, okay? So where we at? That's 20, 40, 60? That's 60. So you guys got 40% left of your tax refund. Take 20% and have fun. Take 20% and have fun. So that means go and buy you a pair of good shoes, or go get your hair done, or go get your nails done. Take 20% because that's some of your hard-earned money that you're actually just getting back from the IRS that they've been holding for the whole year. So go and treat yourself, okay? And then that last 20%, that's your stash. That's your emergency fund. See, there's a difference between having a savings and having an emergency fund. Most people, and see, everybody do their own finances differently, but my motto is you have to have a savings and you have to have an emergency fund. If they're the same, what's going to happen is you're going to end up depleting your savings for emergency purposes, or your emergency funds are going to be depleted because you didn't have a savings. So you need to have an emergency fund, which is saying if your tire busts on the side of the road, you go to that fund, right? If your water pipe busts, you go to that fund. That's the emergency fund. Your savings fund is the one that comes after you've depleted your emergency fund, and it's nothing else there but the savings. That's when you want to go into the savings and say, okay, let me get some cash so I can take care of this, okay? So 10% for tithes, 10% for savings, 20% to bring down some debt, pay down some debt, 20% for yourself, okay? And then also you want to put some money back into your home, and then also make sure you have your emergency fund. And treat yourself, ladies. Treat yourself. If you don't treat yourself, you're going to beat yourself, meaning you're going to be frustrated. You're going to feel like the kid driving you nuts. You're going to feel like you're not able to do anything. Like, oh my gosh, I'm stressed, I'm overwhelmed, I'm overworked. And the first thing that we say, I give up. Nope. Go get a massage. Nope. Go get your hair done. Nope. Go buy a bag. Go do something. So let me tell you why I do my savings like that. So remember, everybody have their own process. This is the Folasade way. One thing I learned is when I deprive my clients of their wants, meaning if they like to eat out and I deprive them, or they like to shop and I deprive them, right? And I tell them, no, don't spend. What happens is they end up spending more. So what you want to do is just set aside a certain amount and stick to it. So if it's $100 a month that you need to be able to take yourself out to get your nails done and go to happy hour with your girlfriend, put that $100 to the side. That's the mommy money. That's the you money, right? But don't deprive yourself. So many people now telling you, oh, well, if you want to invest into your business, or if you want to do this, you need to make sure that you're not buying Starbucks, or you need to cut back on everything. I'm going to be honest with you. What they say, Johnny boy, when Johnny can't play, Johnny end up being a bad boy. Something I'm never good with these sayings, y'all. Yeah, I'm never good with these sayings. But when you are deprived, you overindulge. I'm going to say that again. When you deprive yourself, you overindulge, okay? And think about that when it comes down to food. Think about that when it comes down to like buffets and stuff. Think about it. When you deprive yourself, you overindulge. So I don't want you guys to be overindulged into your money. I want you guys to enjoy it. So I'm going to repeat it for all of you that's probably just tuning in to Rip Radio Network. Tell your girlfriends, get your pen and paper. You want to put 10% savings, 10% to tithes, 20%, okay, goes to paying down debt. And you can divide that between 4 different debts. 5% of the 20 go to the car. 5% of the 20 go to the house. And I don't even care if it's $100, y'all. That $100 matter, okay? 20% goes to treating you. 20% goes back into investing into your home. You cannot be, having your home and you're not happy. Like, to be honest with you guys, I've been investing back into my home. So every week I said, you know what, I'm going to do something else. So about 3 or 4 weeks ago, I changed the racks in the basement bathroom downstairs. I ended up hooking up our workout area last 2 weeks ago. I bought the kids new stuff for their bedroom so I could paint their rooms. Just the little things. They might be like $40 here, $50 here. But let me tell you why I need you to do that. When you guys are at peace, in the comfort of your own home, you're able to blossom and flourish. Remember, when we go out into society, we get beat up. You got people honking at you on the road. You got people talking about pay this. You're thinking about bills. You think about your job. You think about all of your responsibilities. And I don't know about you guys, but my home is my safe haven. right? And when I come home, I want to be able to feel my feet in my little plush little white rug by my bed, right? And I want to be able to have my little tea and my candlelight at nighttime before I go to bed. And you have to be as comfortable too. Most people that are very, very comfortable, how would I say, in their homes and have some type of freedom, like they feel free or feel refreshed, they perform better than the rest, okay? And you want to outperform everybody. So what you want to do, take that 20%. If you like me that want to get out the bed, you know, the plush rug right there, buy a plush rug. If you know you like candles, buy candles. If you know your living room, like my living room, need a little stand for the living space, go buy the stand. Treat yourself, because what you're doing, you're adding value to your home, because the more it looks more beautiful, the better you would take care of it, okay? So don't think about your tax refund as being, oh my gosh, this is the first time that I got $3,000 at one time. Because I know, to be honest with you guys, every tax season, let's really be honest, guys, and give me a call, RIP Radio Network, 301-232-5700. I know many of you, when you get that $4,000, $5,000, $8,000, whatever your tax refund was or normally is, that is the largest lump sum of money that you've ever had in at one time. So what happens? You excited. You start thinking like, oh, I could do this, I could do that, get my hair done, get some bundles, get the new Louis. I see, like, you hype, right? You hype. Wouldn't you be hype? $8,000 in your pocket? But before you get hype, take a pen and paper down and break it up as I said. But first off, write down everything that you think that you have to take care of first. Don't go buy anything first, but write down everything. So if the rent is $1,500, the rent is $1,500. Write it down. If your lights is $300, write it down. So what will happen is you will stay focused and say, you know what? Hey, I still have my March and April obligations. I cannot go and blow XYZ because in March, which is Friday, y'all, like, I don't know about you guys, March is Friday, because March rent is due. My mortgage payment is due. My car note is due. And you want to always keep those things in the forefront so you can stay focused and stay on track. And so this is what I end up doing actually every time I'm getting a large lump sum of money. I don't care if it's a client paying $10,000 at one, $5,000 at one, whatever it is. I sit there and I write it out. The first thing I do, y'all, to be honest, I go and write down all my staff, all my payments to my team. That's the first thing I do. I got to pay my team first. I always eat last. So write down all of your major expenses, write down all of your monthly obligations, and stay focused. But treat yourself too, but only 20%, not the whole refund, okay? So tip number one, 10% tithes, 10% savings, 20% paying down debt, 20% for you. I think I missed a few things, but you guys get it. We'll have the replay on RIP Radio Network for you guys to go back and play it. It's within the first 5 minutes of the video. Get your pen and paper and write it exactly down. And then the next step you're going to do, write down all of your monthly obligations. What are your bills? And then once you do that, you may see that refund amount may not even cover all your bills. So what does that mean, Roger? That means you shouldn't be spending a thing, to be honest with you. Like, let's be honest. But one thing I want you guys to do, if you are an aspiring entrepreneur, I want you to take the money that you would have spent on you. I know. But guess what? It's going to pay off in the long run. If you're an entrepreneur, that 20% that I told all my 9-to-5ers to go out and buy their bundles or, their shoes, whatever they want, you need to take that 20% and reinvest into your company. Many of you don't even have the basics to be able to drive revenue into your company, and you're wondering why you aren't making money. If you don't have a website, it's the time to get one. If you don't have your content, create your content. If you have not started developing your brand and your brand assets, which is your social media templates and your color scheme and your brand style guide, whatever, invest into that. If you know that you need a software to make money or CRM or something, you want to make those necessary investments. But we're only making investments, guys, into things that we will get a return on your investment, okay? And so that may be hiring that coach. So I just received an email because I require now my clients to send me a agenda. For every time they get on my calendar every month, I need to know what we're going to talk about so I can prepare for the meeting, do some research, whatever the case may be. And my client put at the bottom of it, when can we hire a coach? We need help. But I want to let you guys know one thing, because we have a misconception about that. So that's why I didn't say invest into a coach. The reason being is because investing into a coach may not be the solution to your problem. If you don't even have a website or landing pages or email, what do you think your coach is going to do for you to help you make money? Nothing. Nothing. You are not going to make any money if you don't have the necessary tools. So you hiring a coach and you don't even have an email marketing platform, or you don't even have a website, or you don't even have the basics, like, come on now. But you know what, guys? These are the mistakes. These are the mistakes that a lot of entrepreneurs are making. They're hiring the coach and they're investing into the knowledge, but they're not investing into the tools. So, guys, we're about to take a quick break. We'll be right back. The Money Zone on RIP Radio Network. Don't forget, I would love to hear your beautiful voice. 301-232-5700. We'll be right back. Welcome back to segment 2. Like, you know, my live stream is popping over here, and it's so funny because one of the live streams commented and said, well, you didn't say anything about taxes or hiring an accountant in segment 1 when I was talking about you guys' refund. Is because I don't want you to be putting money back into taxes when you're just getting your money back from IRS. Like, for real, you have the income that you made in the business to go ahead on and take care of the taxes. But in segment 2, guys, we're going to briefly talk about why entrepreneurs need an accountant. We have to understand that we need accountants. Like, it's no way around it. But remember, I'm not going to go deep into it because my 4-part web series starts next week, Monday, okay? So if you are following me on Facebook and Instagram and stuff, look out for it. But we're going to touch bases on it just a little bit. So first of all, many entrepreneurs don't understand, that hiring an accountant starts from the moment you come up with that bright idea. Okay? Because your business entity, your advice, your guidance starts right there. The moment you come up with that ding, 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 bright idea, you need someone to say, hey, you know what? That idea is absolutely amazing. Your business should be structured like this because of your income, because of this, because of that. Outside of your business being structured like this, you should have this into your agreement. This should be in your policies. This should be in your procedures. This should be in your employee handbook. This should be this. You shouldn't hire employees until you make this. So, guys, when you first come up with that bright idea as a business person, the first person you're supposed to do, you tell your spouse, boo, I found the idea. I got it. All right, ding. Thank you, Trump. You got the right idea, and the next thing you do, you pick up the phone and you call me, or you call your accountant, or you find you one. The reason why is because in all actuality, the average business owner loses about $5,000 a year for the lifetime of their business because they never received the initial advice on why they should be an LLC, or why they should be an S Corp, or why they should be a partnership, or why they shouldn't be any of those, and what they should do to be able to minimize their tax burdens. Another thing, you have to be in compliance. If you are not an accountant, you don't know all of your state obligations and your federal obligations. You don't even know where to start with the research, right? And for real, your time is worth way more than that. You're supposed to be saying, hey, how much is it going to cost me to have you do X, Y, Z for me, or to make sure that the business is in compliance, and so forth, right? You are supposed to do that from the beginning. But guess what I hear all the time on Facebook, all the time on IG, all the time walking down the street? Folasade, I got an accountant. Folasade, I got an accountant. Let me be really honest with you guys. How would I put this? Because I don't want to hurt nobody's feelings. Most of the people that come to me and tell me that they have an accountant, their stuff is not in order. Most of the people that say that they have an accountant don't have an accountant, they have a tax preparer. So there's a significant difference between an accountant, a bookkeeper, and a tax preparer. But we're going to talk about that next week on my web series, okay? So you guys can really learn the difference. But I really want you to understand that you guys are dealing with compliance with federal and state laws. You guys are dealing with legal problems. You guys are dealing with policies and procedures and contracts and all of this stuff, but you guys online talk about I'm an entrepreneur, but you winging it. How are you as an entrepreneur and you winging it and you don't even have your contracts in order? How are you in business and you talking about you an entrepreneur, but you don't even have your payment processing in order? So you need to figure out, either you're going to use PayPal, you're going to use this, you're going to have this. What's your return policy? What's your refund policy? What's your term and conditions? What's this? What's that, right? You guys probably wasn't even thinking about none of that. And see, that's the reason why, on average, each entrepreneur loses about $5,000 a year. And if you think about that, multiply that times 5, that's 5 times 5, that's $25,000 in 5 years. That's your child's college tuition that you're playing with. That's your child's private school tuition that you're playing with. That's your reinvestment money to take your business to the next level. I have clients till this day, right now, that didn't hire me from the beginning, and now it's costing them so much money. They don't have the money to reinvest back into their company. Their finances are kind of, well, I got them in order, but they just made so many mistakes prior to me that it's impacting them now. Like, I'm not even understanding why you think TurboTax, LegalZoom, and Popcorn is your accountant. Like, let's really put the cards on the table, because you guys have got the game all mistaken, thinking that you're going to be able to play with roll. Let me say, not even play, roll with IRS. Roll with IRS. You can't roll with IRS because they're not rolling with you. They want to roll with your accountant. They want to roll with you being in compliance. They want to roll with your business being in order. They want to see your business grow, guys. But because you haven't hired the right person, which is your accountant first, many of you are going to fail. And you're at the brink of failure right now. And so, guys, let me tell you something. If you think I'm joking, watch my web series next week. Watch the data that I show you guys on how often businesses fail. It's not even what the SBA and the small biz trends really say. Guys, it's worse, because your little small business is not even included in their statistics. So when the SBA say 9 out of 10 businesses fail, they're not talking about your business. Because in all actuality, in our way of business right now, 10 out of 10 actually fail. 10 out of 10 actually fail. Okay? So guys, you as an entrepreneur, you need an accountant. Remember, for the startup phase, you need an accountant for the normal operations. So what is that? To make sure you're in compliance, to make sure your payroll is done, to make sure your taxes are done, to make sure your sales tax are filed, to make sure your personal property forms are filed, to make sure that your business has the right structures. And it's just so many different ways. Like, guys, when you get my freemium next week, I think it's, Leo said it's 18 reasons why you need an accountant. When you get my freemium next week, when we release the web series, you're going to see. You're going to see. Guys, you are playing with your future and your livelihood. I cannot show you all how many marriages have been broken because of businesses that never became successful. You guys don't even understand how many 401ks have been depleted, how many IRAs, how many homes been foreclosed, cars repossessed, everything, simply because they didn't hire an accountant. Guys, before you go out and create a product, you're supposed to get the numbers done. Before you go out and hire anybody, you're supposed to calculate the numbers and see if it makes sense, okay? Before you go and say you're going to do this service, you need someone to evaluate the cost behind incorporating that service. But guess what? No one is telling you this, because no one really wants you to be that successful. Because if your business fails, somebody else will get your market share. And the less saturation equals more market share for companies like Amazon and for companies like Google and companies like, all of these big, massive companies. Every time an entrepreneur stop and start, you're losing market share. And every time your business open up and close, you lose market share, and your competitors are dancing because they finally going to get your business. They're dancing because they know that your clients have nowhere else to go. So guys, if you are an entrepreneur, give me a call, 301-232-5700, because see, look, you guys are doing, so Google your accountant. So Google your accountant. No, I didn't say Google your accountant. So you're telling me, this is what you guys be telling me online and all on the internet streets and on everywhere I go. Nah, Folasade, I don't have no accountant, man. I don't really think I need one. All you telling me is that Google is your accountant, but Google can't talk. Google don't know how much money you made. Google don't know you in debt. Google don't know you can't pay your rent. Google don't know you don't have a website. Oh, no, they know because it ain't coming on their search feed. Google don't know your business is struggling, but your accountant will. Your accountant will look at all the different factors and give you the guidance that you need. But because entrepreneurs think that you can DIY this accountant, because there's a tool called TurboTax and a tool called QuickBooks that you guys think that you can do your books quicker than me, or you think you can do your books better than me. That ain't even the case. But what I found is, for every entrepreneur that does not do their accounting or do it themselves, they aren't as successful as the entrepreneur that hire me. Like, my clients are like shitting on you guys. Like, to be honest with you, like, let me be really frank. For all of you that have watched and said, oh, well, I don't think accounting is what I really need. I'm going to let you know one thing. If you don't start it now, it's going to hurt you in 4 and 5 years later. And let me explain why. We need the data from day one of your business to tell you what to do, what not to do, which route to go, why you should do this. And that's your accounting. Your accounting tells you all of that. It says, hey, Gerald, you spent this. Hey, Andy, you did this, right? That's what it says. But you entrepreneurs don't have that data, so you're making the same mistakes over and over again. You making investments that you didn't even know that you've made. You're overspending and you don't even know it because you're using your credit cards, or you getting money from your husbands, right? Like, guys, this has a complete ripple effect. And it's a negative ripple effect. It's not the wave. Like, y'all really want to be, what they say in Clueless, rolling with the homies. Nope, you guys are not rolling with the homies. Y'all, you shuffling. You shuffling. And see, that's the problem. Many of you are shuffling and you aren't rolling. You pose a roll on that wave. What do my business need? Let me look. Let me look at the numbers. Let me see what I can invest. Let me see what the numbers say. Let me do this. Okay. Did that work? Let me notice. Let me look at the numbers. Let me see this. But this is not what you guys are doing. You're like, oh my God, Folasade. Oh my God. I know I need a coach because somebody said it on the live stream the other day that I needed a coach and I didn't make any money today. And Folasade, I need a coach like today. I need ClickFunnels, Folasade. They just did a bomb ClickFunnels ad and I need that, right? That's how you guys be. You do. You know you do. Don't be mad at me. Don't even shade me on my online or nothing like that, because this is the truth. Because my clients even tell me, and I'm like, no, chill. You don't need that. But the reason why I had to be so dramatic with it is because that's how dramatic you are when you're making investments that you think, well, what prevents you from having to do the work? See, you guys probably thought I was going to say something else. A lot of you are making investments into things thinking that you don't have to do the work. And not one investment that I've made, not a coach, not a book, not a system, not a document, not a freemium, not anything, have allowed me to not do the work. Even my health coach right on the live stream now, I still got to work out. My trainer, 5 o'clock in the morning, I still working out. To eat good, I got a meal prep on Saturdays. You know what I mean? So in everything you guys have to do, don't go into an investment thinking that, oh, I'm not going to have to do that much work. Boom. Y'all be hyped. Like, right? No. Go into it like my work is just beginning. What do I need to do? What is this software going to give me? What is my accountant going to give me? What advice is my coach going to tell me? How do I implement this? How do I make it easier? See, guys, this is the thing. You think this entrepreneurship stuff is so easy. I know we make it look good. We make it look real good, right? Real good. We make it look real easy. We got the little T-shirts on. Got the little hat on, right? And you guys think that's all we do. We take the little picture, right? Right? But guess what? That's all you guys see. That's all you guys see. If you all really took a look at the numbers and sat down with an accountant, preferably me, you will see the amount of work it will actually take you to really achieve your goals. So you're not going to look at the next coach as your savior. You're going to look at that next coach as just your guide. You're not going to look at the next at the next software and say, oh my God, I'm not going to have to send emails no more. Nope. You're going to say, okay, I got this software. Now I might need this person to help me do this. Okay? So guys, when you're out there making these investments with your tax refunds, right? Or trying to see if this world of entrepreneurship is for you, I just want you to know a few things. You need an accountant from the moment you think of your idea, because there are so many legal ramifications behind starting a business that a lot of you are not in compliance. A lot of y'all are straight illegal. Y'all got businesses in Delaware and your home is in Texas. So you're operating a business in Texas illegally because you never registered your business in Texas or did what Texas requires you to do. But because you didn't hire an accountant, you didn't even know your business is illegal right now. Oh, or you lived in New York, now you live in California. And because you don't have an accountant, you don't know you're operating an illegal business in California. See, guys, let me tell you something. This internet was made to give us more resources, but it was never meant to take your accountant out of the process or take your attorney out of the process. It just gave you the opportunity to maybe fill in some documents really fast. Maybe submit something to the state very fast, right? Or make it a little easier. But they don't tell you the laws, the requirements, and the process. So for example, for all of you DIY your accounting, you guys are not in compliance with GAAP. That's the generally accepted accounting principles. So for all of you guys that think, see, this is what cracks me up. Like, y'all want to make me, I'm just getting hype. Like, I should have my little drink. I got to bring my drink for sure. You guys got me hyped. Let me tell you why. Because you forgot that there's a standard to doing your financial statement. There's this thing called GAAP, the AICPA controls. And if your financial statements are not in compliance with GAAP, then your taxes may have been filed incorrectly, and so forth and so forth and so forth. But guess what? Because you can Google taxes. Oh, Google, how do I do taxes for LLC, right? And then Google says no response, but give you links. And then what do? You have to read and read and read. So I wanted to tell you guys something before I close out, just to give you an example. And my health coach, I think she's still online here on our live stream. Every time she called me, even to my clients, right? Okay, Folasade, I I know I ain't pay you yet for my taxes yet because I don't got my paperwork together. And I want to respect your time. But this, my clients today I got off the call with, they said, all right, Folasade, we're done. We didn't want to take up your time. And so I bring that to you to let you know is that even the people that's paying me respect my time and understand that, yes, they could have tried to Google or type in the question like they would have asked me into Google, but they wouldn't have gotten the exact answer that fits their situation. So now, when you guys go out to hire your health coach, when you guys go out to hire your coach, you want specific information for you. You don't want no generalization. You don't want to have to be sitting there like, oh my gosh, okay, so this person told me I'm supposed to do this, but they didn't say that it would work for my industry. They didn't say it would work for my business. They didn't even look at this. Like I know that's how you guys feel, because that's the case. By you depending and relying on sources that does not communicate back to you and that does not know your financial situation, your state, where you are, your business structure, how much money you making now, how much money you making on your job, all of that advice is irrelevant. All of that advice is not true. All of that advice might be wrong because it's not specific to you. You want specific information about your accounting, your health, your finances, your branding, your PR, your team. You want everything specific to your industry and your business. And yes, Tamara on live stream said that's exactly how you end up scatterbrained, and that's exactly how you end up not executing and end up in information overload. Because you're sitting there trying to avoid paying my hourly rate and Googling all night. Your husband trying to boom boom and you sitting there Googling, you about to mess up your relationship. Go boom boom the husband, pay me my fee. And if he would have knew, let's be honest, if your husband would have knew all he had to do was pay me my $300 and you would have had your answer in 1 minute and he could have got his boom boom when he wanted it, he would have paid me straight up. He would have me on retainer. All right, Folasade, so I'm about tired of her keep researching this accounting stuff. Can you give her a call and tell her you her accountant so I can have my time with my wife because she's trying to do your job? So guys, we almost done with the Money Zone on RIP Radio Network, guys, and I just wanted to bring kind of like some fun and some dramatics behind what's going to cause you to lose your dream. Because accounting dampers more dreams than your procrastination. The moment you're not in compliance with the state, you cannot get paid by the government or the state. The moment your business is not in compliance, you do not look like you are a legit business now, right? You don't look like you legit, like, let's be honest. And then also the moment that you overpay taxes for years and years to come, you would then end up understanding that you could have saved your business if you would have hired me, because you would have had more money to reinvest. You would have had more money to hire a coach or to buy more product or to hire help so you can be free or do something else in your house or whatever the case may be, whatever you need to do for that mental, right? But a lot of you aren't understanding that accounting is one of the oldest form of any type of business. If you go back dated all the way before the Bible, what they say, before Christ, they were utilizing accounting. So why are we in the 21st century with all of these different factors, saturation and competition, market, economy, this, laws, compliance, all of this stuff, why do you guys not think that accounting is just as important as it was 15 years ago as it is today. But guys, most people don't understand that what you do right now, your inability to do your accounting today, will stop that government contract in 2 years, will stop you from getting that investor in 2 years, will stop you from having a savings in 2 years, will stop you from having your business in existing and flourishing in 2 years. I've seen accounting destroy or grow a business. Actually, I've seen them like 50-50. The ones that don't do accounting, they fail. I haven't seen not one of my clients that didn't do accounting be successful, straight up. Not one of them. And the ones that do make it, they owe hundreds and hundreds and hundreds of thousands of dollars. And the ones that do use accounting, they're waving. They're rolling with the homies. Rolling with the homies, right? With millions of dollars in their bank account. So guys, I'm Folasade, the Accountability Accountant, guys. Don't forget to subscribe to my mailing list, bit.ly/Folasade TV. But before I close out, just know this. If you're trying to save my hourly rate and Googling your way to build your business, ask yourself this, because Mark Cuban said it. Accounting is necessary. Accounting is required. And accounting is a must if you want to achieve your goals. All right, guys? I'll see you next week, Tuesday, Radio Network. I'm Folasade, the Accountability Accountant, guys. Call in next week. I'll see you all later.